All right, today is Thursday, July 29th. This is a recap for the stock market activities today. In focus tonight, we have COVID-19 and Robinhood. What a bomb that was, huh? And another one, Amazon dropping like a rock after hours. But first, we start with the great state of Florida, with its long miles of golden sunny beaches. And its big, beautiful, delicious oranges. And its Cuban coffee. A state where dance floors are never empty. A state that has the best yayo in the world. It is also a state where the COVID-19 virus doesn't even exist.
Had a lot of people in your profession who waxed poetically for weeks and weeks about how Florida was going to be just like New York. Wait 2 weeks, Florida's going to be next. Just like Italy, wait 2 weeks. Well, hell, we're 8 weeks away from that, and it hasn't happened.
And on top of that, it is the state that gave us zombies. The state where the zombie apocalypse begins.
Story out front tonight. Drugs known as bath salts being blamed for a gruesome scene in Miami. This is a naked man. He was shot dead on Saturday by police because he was gnawing off another man's face. Obviously, that sounds horrific, and it is. I want to warn you that the pictures we're about to show you are very disturbing.
Are you on drugs? Tell me what's wrong. What's wrong?
I never seen that. I'm going to go. I don't want to.
Did you call 911?
Yes, and they say they're not inside.
Okay, they're coming.
And now the state of Florida is giving us another Colombian gift. And no, not the good Colombian stuff back in the 70s and the 80s. This is the new Colombian variant of COVID-19, and it is starting to spread in the great state of Florida. And why is this important, by the way? It is important because if you recall, yesterday the Federal Reserve Chairman, Jerome Powell, gave a press conference. And in it, he said this.
Another way, though, is more on the risk side, and that is as long as COVID is running loose out there, as long as there's time and space for the development of new strains, no one's really finally safe. These strains, there's no reason they just can't keep coming, and one more powerful than the next. We don't know that, but that's certainly a plausible outcome. Now, as vaccinations rise, we can nonetheless get back to our economic activity. But
if we have new variants, we gotta print more. So long as the virus is spreading around, creating new variants, then print, baby, print. That's the real vaccine. When you print money, all of a sudden the virus goes away. And more printing props up the stock market and makes the rich richer. Powell says, yeah, I know inflation is running a little hot, but what is inflation anyways? Is it like a friend of yours? Because I don't know what inflation is. Oh, and by the way, I'm waiting for unemployment to drop first before I stop printing. And even if unemployment drops, you got all of these variants. I don't know what to do. And I gotta continue to print with no end in sight. Next, we have Robinhood. Yes, Robinhood, the biggest casino in the world, right at the palm of your hands. You download the Robinhood app, you log in, you put your blindfold on, and you buy random call options. And just like that, ta-da, you're a millionaire. Money like you have never seen before. Thank you to the printer press of the Federal Reserve led by Papa Jerome Powell. But perhaps we get a problem here when it comes to Robinhood, because if you remember, a few months ago, we had an interesting phenomena in this massive orgy of a bubble that we haven't seen anything like since the dot-com bubble about 20 years ago. And this phenomena is called meme stocks. Yes, meme stocks, where retail investors buy bankrupt companies for fun, just to create memes and have fun online. And what do you know? These companies blast higher, the stocks of these companies, and all of a sudden we're making money like we have never seen before. Once again, thank you to the reckless policies of the Federal Reserve. One of these stocks was GameStop. And you know, the retail side's young investors specifically bought the stock in retro optimism to bring back the 1990s, the good old days when you bought video games from the store and the stock experienced what is called a gamma squeeze followed by a short squeeze, where those who bet against the stock all of a sudden facing a tsunami of buying from the retail side, forcing them to buy the stock and cover their short positions. And as the mania accelerated, retail traders and investors started buying call options on GameStop. And it was that infamous Thursday where the stock popped by over 100% in the morning, pre-market. And now, all of these call options that we bought, expiring the very next Friday, exploded in value, printing over 10,000% gains. But, and this is the big but, there was a problem. The good folks over at Robinhood ran out of cash, and they could not pay us our money if we wanted to cash out these call options. And what do you know? They colluded all together. All the brokers colluded together, and they banned trading for GameStop and other meme stocks, allowing selling of the stock but not buying. And therefore, these stocks crashed right away, and all of these call options all of a sudden expired worthless. And now retail traders and investors are mad and furious against Robinhood and their CEO, Vlad. Fast forward a few months later, and now we have the IPO. And of course, Robinhood started with a propaganda tour to prop up the stock, telling us that, warning, it's gonna be a meme stock. Warning, you might want to buy right now before the stampede starts on IPO day. Well, here it is, IPO day, and Robinhood is down by more than 7%. A massive disappointment and the worst opening day for stock its size. So perhaps retail traders and investors finally have their revenge. And it is a dish best served cold. And now Robinhood is down, and let's see if us moron retail traders and investors gonna keep this momentum and stick it to these fuckers over at Robinhood, or are we gonna be stupid again and stampede and buy the dip in this stock? You know who's not going to buy the dip? Is this guy you're listening to right now. Because the moron that I am, I put my blindfolds on and I tried to stampede Naruto style heads first to buy the Robinhood IPO today in the morning. But since I have my blindfold on, I accidentally bought the stock of Red Robin. Yes, Red Robin. You know, back in high school, when you had a crush on a girl, you take her on a date to get food poisoning over at Red Robin. That Red Robin. But I wasn't alone. I wasn't the only moron who did the same mistake, because the stock of Red Robin spiked higher as the Robinhood IPO started trading in the market. Pump and dump, in, out, hello, goodbye. Next, we have the evil empire of Amazon, and it is dropping like a rock after hours. Last time I checked, it is down over 7%. And of course, yours truly, your favorite analyst on YouTube, the guy you're listening to right now, told you exactly that this is going to happen when Amazon reports earnings. And the reason is, when you look at their balance sheet, it is pristine. Earnings are growing. Revenues are growing. So what is the problem? Once again, back to yours truly, who told you a few days ago, the problem is going to be the year-over-year growth, aka the base effects. Last year, when everybody was locked down, we hoarded stuff out of Amazon. But now, a year later, that we are out and about, we're actually shopping outside. We're being nostalgic. We're going back to the mall, eating at Red Robin, and shopping at the stores at the mall. And therefore, the year-over-year growth for Amazon in North America dropped from 43% last year to only 22% this year. And therefore, the growth of the evil empire is deaccelerating, and so is the stock. We're going to talk about the chart of Amazon and a lot more in the technical analysis, but for now, let's start by how the market closed today. And here we go! The Dow Industrial Average closing in the green by 153.60 points, or a gain of 0.44%. The Nasdaq closing in the green by 15.68 points, or a gain of 0.11%. The S&P 500 closing in the green, what a surprise, by 18.51 points, or a gain of 0.11%. 42%. What about the sector's performance today? Leading the pack at number 1 and capturing the gold medal, materials. At number 2 for the silver, energy. And at number 3 for the bronze, industrials. The inflationary trade back in the front seat. Back in favor, baby. Why? Because Papa Jerome of the Federal Reserve said yesterday that he doesn't see inflation. What is inflation? I don't know what inflation is. This is the first time I hear about inflation. And even if there is inflation, it's going to be transitory. Oh, and by the way, I'm not going to taper until we reach 2.5% unemployment rate, which will never happen, which means that print, baby print, and inflation will get out of hand. It will continue to grow and grow and grow. And the best hedge against inflation is investing in commodities and the inflationary side of the market. Meanwhile, the laggards of the day led by communication services, real estate, and healthcare. What about the breadth of the market, the advance to decline ratio? NYSE 72% advancing versus 26% declining. NASDAQ 54% advancing versus 43% declining. Once again, when we get into this inflationary mode in the market, the old school, boring stocks outperform. The not so sexy, not so cool stocks. You know, the Alcoas, Martin Marietas, the banks, those kind of stocks. But the sexy stocks in the NASDAQ tend to underperform. Too early to say if this is going to be a sticky theme in the market or it's just transitory. Moving on to futures. And you know, we have geniuses like Dan Ives of Wedbush, who says that there is a thupathakul in Apple. And he's been saying that thupathakul in Apple for the last 7 years. Thupathakul, 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 thupathakul. But the real thupathakul is in commodities. And now that we have the green light from the Federal Reserve that they're going to let inflation go even harder, you're seeing commodities rallying across the board as the US dollar collapses. Massive gains for crude oil, the WTI and Brent closing almost with 2% gains apiece. What about softs? Lumber, you know, the transitory phenomena? Well, it's coming back again, rebounding by over 1.5% today. Cotton futures closing on the flat line. Meanwhile, we have declines for sugar, coffee, OJ, and coca futures. But remember this, we had snow in Brazil today. Yes, snow in the middle of the jungle. We have an Arctic blast, temperatures dropping, massive snowstorms and frosts all over the country. And this is destroying coffee crops. What does that mean? It means that the price of coffee will continue to skyrocket higher, along with other commodities coming out of Brazil, the likes of OJ, soybeans, etc. And pretty soon, with the rise of coffee prices, we're going to see the coffee mafia. Coffee is the new cocaine, and it is addictive too. Try to live without coffee. And no, don't look for Vietnam for any relief, because the farmers over at Vietnam are saying, we don't got it either. Coffee is the new cocaine. What about metals? Rising across the board. Gold, silver, platinum, copper, palladium, all rising higher due to the reversal to the downside in the US dollar. What about meats? Modest declines for live cattle and lean hogs futures. Meanwhile, feeder cattle futures declining by about 1% today. On the other hand, grains futures blasting higher across the board. Soybeans, soybean meal, soybean oil, corn, wheat, rough rice, all rising higher. Meanwhile, we have small retreats here in oats and canola futures. Remember the thupathakul, it's right here. Moving on to the big casino, the options market, what's going on? At number 1, leading all the tables in the casino, the hottest table in the casino today, AMD, Advanced Micro Devices. All of a sudden now, you have these geniuses stampeding and buying call options on AMD. When the guy you're listening to right now, yours truly, your favorite analyst, told you to buy calls on AMD ahead of time, and the stock blasted higher by over 10% since then. Now, I get a spoiler alert for you. The Johnny-come-latelys, specifically the ones who bought call options expiring tomorrow, the likelihood is you're gonna lose money, because after a run of 10% or so in a couple of days, you're gonna see some profit taking and call options being closed as we head to the end of the week. AMD leading the pack by about 1.8 million contracts traded today. About 72% of those were calls. Tesla, the souffle, at number 2, with about 900,000 contracts. About 58% of those were calls. And the souffle blasted higher today, and I got the reason for you in the technical analysis. At number 3, falling out of favor, Apple. We were trading 3 million contracts a few weeks ago. Now we're trading 820,000 contracts. About 70% of those were calls. Moving on to the unusual trades that took place in the options market today, starting with the ticker SPY for the S&P 500. Of course, the market is trading higher. Corporate earnings are pristine. We have the green light from the Federal Reserve to continue to party, and everybody looking at the charts and they're jerking off. But somebody's smelling trouble here, and they're buying puts, aka protection, on the SPY. Perhaps not a protection trade, by the way. Perhaps a bet on a crash. They bought the 365 puts expiration date September 3rd, with expectations that the market will drop by over 17% by then. They paid about 55 cents apiece. All in all, spending about $3.5 million. And pay attention here, we're getting into the seasonality of the stock market, and the seasonality says August, September, bad months for the market. What about the ticker KPLT, whatever that is, another Chinese garbage that was down big. All of these Chinese names rebounded higher. I'm not even sure that this is a Chinese name or not. I'm just assuming it is. But here we have somebody betting for a reversal once again to the downside by buying the 7.5 puts expiration date August 20th, with expectations that the name will drop by over 11% by then. And they paid about 50 cents apiece to enter this trade. All in all, spending about $2 million. What about the trade for the ticker FXI? This is the Chinese tech ETF. They're all rebounding higher. China decided to inject cash into their market last night. And all of a sudden, the Hong Kong market, the Hang Seng, the Shanghai Composite, all blasting higher. All of a sudden, the CCP thought, perhaps crashing our own companies, not a good idea. And here we have somebody betting for a continuation of the rebound higher in this Chinese ETF. They bought the 43 calls, expiration date October 15th, with expectations that the name will rise higher by over 5% by then. They paid about $1 a piece to enter this trade. All in all, bringing the total to about $4 million. What about the trades for the ticker SPY, S&P 500? This is a put spread. They bought the 385 and they sold the 345 puts with the expiration date of September 3rd. They are expecting a drop in the market, but not more than 20%. They paid about $1 a piece for the 385 puts, all in all spending about $3 million. And then they sold the 345, collecting about $1 million in the process, bringing the total to about $2 million. What about the trade for the ticker GLD? Gold blasting higher as we see the US dollar finally retreating and trading down. Here we have somebody betting for more gains for gold by buying calls on the ETF for gold, GLD. They bought the 190 calls, expiration date October 15th, with expectations that the name will rise by over 11% by then. They paid about 70 cents apiece to enter this trade. All in all, bringing the total to about $2 million. What about the trade for the ticker RIOT, Riot Blockchain? This is a proxy play for Bitcoin and tulips in general. But perhaps the tulip rally, the short covering rally, is coming to an end, because here we have somebody buying puts on Riot, specifically the 30 puts with the expiration date of August 6, meaning this upcoming week, next week, with the expectations that the name will drop by over 6% by then. And they paid about $1 a piece to enter this trade. All in all, spending about $1 million. Lastly, what about the trade for the ticker SNAP, Snapchat? They're making a bullish bet here by buying the 90 calls, expiration date October 15th, with expectations that Snapchat will run higher by over 20% by then. They paid about $2 a piece to enter this trade. All in all, spending about $1.5 million. $1 million here, $1 million there. What's $1 million between friends? It's a casino after all. Moving on to the heat map analysis. What's going on here? Again, the market remains themeless. Even though the inflationary trade of financials, industrials, energy, materials managed to outperform today. But for now, the market is guided via earnings. You see names like Facebook down about 4%, PayPal down over 6% today, a nasty drop for PayPal on the heels of earnings. Meanwhile, we have other names riding higher, specifically in the chip sector like Qualcomm, AMD, all reporting earnings and blasting higher. And by the way, these chip names happen to trade higher along with the inflationary trade. They happen to be offensive in nature. The Chinese names remain volatile. Tal Education is down again. Likewise, Las Vegas Sands got caught in this Chinese crackdown. They thought they're de-risking by selling their Las Vegas properties. Well, now they're catching a nasty one. Meanwhile, Alibaba, Pinduoduo, JD still holding, but perhaps they will start to sell off again soon. Some notable mentions here. Tesla, we're going to talk about this. Why is Tesla trading higher? In the technical analysis, we have Zoom trading higher, but we also have Uber. Uber getting smashed, and the reason is they're issuing more shares according to Goldman Sachs, and SoftBank is actually selling some of its stake in Uber, and therefore Uber is down about 3% today. We have another name, Pinterest, the ticker PINS. This was sold aggressively during the regular session, but down big, a nasty drop after hours, right after they announced earnings. So somebody got the information ahead of time, and they started dumping PINS. Moving on to charts. Starting with the 30 minutes chart of the SPY. We talked about the cup and handle formation all over the market, not just the SPY, but the cup and handle formation leading the market to blast higher. Coffee futures going higher, cup and handles going higher. The Federal Reserve says, what is inflation? Is he a friend of yours? Because I don't know any inflation. We're going to continue to print, baby, print. We got the green light. All-time highs. What are you worried about? What are you afraid of? I get all these messages every single day. Bro, the market looks like it's gonna crash. You gotta buy puts, yada, yada, yada. Meanwhile, Papa Jerome says, put your blindfold on, go back to the casino, and buy. So the sky is the limit, right? Wrong. And I'll show you why. This is the daily chart of the continuous contract of the SPY. While the chart is trading pretty much at all-time highs, above the support of 4,384.5, we still have negative divergence in the RSI. The MACD indicator is overextended and it is struggling to keep the positive momentum. In addition, we have Amazon dropping big after hours, and you will see the ETFization impact in the markets. SPY, Qs will all drop on Amazon drops alone. Looking at the candlestick pattern alone, this is a bullish formation. This is bullish consolidation, which will allow the market to blast higher eventually. But in this channel, we read the tea leaves. We use the momentum indicators, we use the options market, and we use, most importantly, our heads. And therefore, should I give it the thumbs down? Yes, I'm giving it the thumbs down. Here we go. Thumbs down. And if the market goes down tomorrow, you'll come back here and say, wow, what a genius. And if it doesn't, you'll come back here and say, oh, what a moron. You should retire, bro. Moving on to the Qs, 30 minutes chart. Again, cup and handle formation leading the Qs to rise higher. But again, there is this hesitancy. Even though we got decent earnings, blockbuster earnings from Apple, Microsoft, Google, Facebook, even Amazon. But these valuations are sky high, and the market is starting to smell something bad here underneath it all. If the Fed is in denial about inflation and all of that, yes, on paper that gives us the green light to continue to buy the stock market, specifically the inflationary side of the stock market. But again, watch the seasonality, the exhaustion of the momentum higher, the de-risking before we get into September, which is the worst month, historically speaking, in the stock market, and therefore this is probably not going to hold in the Qs, and we have Amazon dropping big after hours, so the likelihood is the chart will go down at a minimum to 363 for support, if not 360 and a half once again, retesting that level, and we will take it from there. Of course, breaking below that level will be an ominous signal, but for now we're eyeing 363 and 360 and a half for support. This is a daily chart for the continuous contract for the Nasdaq. This is looking even worse than the SPY from a momentum perspective. The negative divergence is clearer on the chart of the Nasdaq than it is in the SPY. The MACD indicator is already registering red impressions in the histogram and failing to cross into positive territory. So we have confirmation from the momentum indicators that the Nasdaq is about to drop again. The candlestick pattern still trading in or around the all-time highs of 15,000. Looking at the chart itself, the candlesticks, no problem here. But again, when you look at the momentum, when you use your head, you see what happened after Apple's earnings and after Amazon's earnings. This baby is about to go down. And by the way, here's Amazon's chart. What do you expect going to happen when the geniuses stampede ahead of time? They're putting the blindfolds on, stampeding Naruto style, heads first, buy first, ask questions later, and they pushed Amazon higher by about 18% or more. Almost 20% ahead of earnings. The positive reaction is already front-loaded. Buy the rumor, sell the news. And of course, they bought Amazon stock on Jeff Bezos going to space optimism. What a bunch of geniuses. And now the likelihood is that the stock is going to go down to the box of consolidation. And by the way, who told you that this is going to happen a few days ago? Once again, yours truly, your favorite analyst, the guy you're listening to right now. So my expectation looking at this stock is it will probably still go back to the consolidation range and trade sideways, because while earnings will be impressive, it is extremely hard to see any growth year over year. And therefore, I believe that this stock will continue to consolidate for a little while, for a longer period of time before it starts moving out of the consolidation range. And here it is. Amazon will go back to the consolidation range. It doesn't mean it's going to crash or break below the consolidation range. It just has to park there for a longer period of time before earnings start to catch up with this very rich and overextended valuation. Moving on to the 30 minutes chart of the IWM, rising higher all the way, breaking the resistance of 223, but again doing a 180 by the end of the day, closing below that number. This is not a good closing here because you should have been able to keep the support of 223. The likelihood is after a decent rebound like we saw in the IWM, we will see some retreat starting tomorrow. But all in all, in my opinion, the IWM will continue to outperform the Nasdaq, specifically if the market decides to go with the Fed, saying that inflation will continue to rise higher. So why not buy these reopening names and the inflationary offensive sectors of the market represented by the IWM small caps, the Russell 2000. Moving on to the Dixie, the dollar index. What a drop. Jerome says, I don't know inflation. I don't see inflation. I never heard of inflation. And therefore, I'm going to continue to print. Printing more means that the US dollar goes down. And it is finally breaking the support level of 92. And we saw the Australian dollar, sterling, all blasting higher, significantly higher today on the demise of the US dollar. The next stop is 91, but it remains to be seen if investors are going to change sentiment starting tomorrow. If we see the Nasdaq selling off and we see a mini sell-off in the market, more appetite for cash, that will perhaps put a floor on the drop in the US dollar, and perhaps it will recapture 92 for support once again. What about gold? Gold is riding higher. Remember, I call gold the mature guy in the room. Gold has been consolidating and waiting until a solid confirmation that the US dollar has stopped and it is starting to drop before it starts to rally. When you look at copper and other commodities, they're not the mature guy in the room. They do impulsive moves up and down, but gold has less volatility, and the reason is it is the mature guy in the room. It awaits and it looks for confirmations before making its move. And now it is blasting higher on the heels of the drop in the US dollar. What about yields? Not moving at all, and for now, yields mean nothing at all. You cannot use yields as an indicator one way or the other for inflation, tapering, or otherwise. We're actually using the US dollar dollar and gold and other charts to measure the market's pulse and sentiment regarding inflation and tapering. From a technical perspective for yields, the test is 1.28 basis points. Closing the week above that level decisively will mean that yields will continue to climb higher. Closing below that level decisively in a weekly candle will mean that we have more pain to come for yields and more gains to come for, you guessed it, the TLT. Here's a weekly chart for the TLT, still holding in or around 149, which happens to be the resistance. And again, we're waiting for a closing on weekly basis above or below 149, preferably decisively so, meaning closing at 150 on the upper side or closing at 149, so we can have a clear guideline on what to do regarding the bond market in upcoming weeks. What about the VIX 4 hours chart? We talked about the pop in the MACD, resulting in a baby mini pop in the VIX all the way to 20 and then reversing, facing the resistance from that level. But perhaps the pop is not over yet. Yes, the 4 hours MACD indicator is registering red impressions on the histogram, but it can easily curl back higher, registering green impressions in the histogram. We don't have a clear, decisive decision by the MACD, the momentum of the VIX, and therefore the assumption is, and this is just the assumption, Amazon goes down, it will take the SPY down with it, and we will see a pop in the VIX. The 4 hours MACD indicator on the VIX will start registering green impressions on the histogram once again. And the test is, will the pop this time around enable the VIX to close above 20 from a weekly basis? If that is the case, then the so-called seasonality will play out and we will see a lot of pain in the market and the VIX rising higher above 20. What about Apple 30 minutes chart? Again, keeping range, the support 145, the resistance 150. But if the drop in Amazon sticks in the morning, the likelihood is Apple will go down, breaking the support of 145. This will be a bad signal for Apple because it will lead the name to go down all the way to 140 once again. Folks, this is the ETFization factor of the market. It has been good for us market participants for a long time because even if you buy the wrong ticker, the ETFization factor of the market will push your ticker higher, even if it is the shitty ticker. But there is a flip side of that coin, that when we see a sell-off, they're going to sell the NASDAQ, the Qs, the SPY. The ETFization of the market will take its course, and you will see all of these names dropping together. The good, the bad, and the ugly. Speaking of, here is Tesla, the souffle. 30 minutes chart, blasting higher. But again, it is within the NASDAQ. It will face the ETFization impact from the drop of Amazon. It blasted higher today, above 657. And now it is facing the resistance of 679, 680. You can round it up, it doesn't matter to me. My number is 679. Why did Tesla outperform today? Here's the reason. We have Reverend Elon Musk pumping once again and saying Tesla AI Day, August 19th. Boom, the culties put their blindfolds on and they stampede Naruto style, heads first, buy first, ask questions later. And this is a deja vu for Battery Day. Remember Battery Day? Oh, Battery Day. That's the one. The culties kept telling us, wait till Battery Day. That's the one. Battery Day. Oh, Battery Day. That's the one. When Tesla's gonna blast to $15,000 a share. You just wait for Battery Day and Jesus Christ will descend down from heaven and say, bye Tesla, bro. And of course, Battery Day was another pump and dump. Tesla didn't go anywhere from Battery Day. And this is not really Jesus. This is some hippie dude with long hair and a beard from Colorado. The real Jesus is actually a brown Middle Eastern guy. And if he comes to this country, you probably want him to be deported. We're gonna skip tulips, BTC, and AMC apes. I don't got no time for tulips and apes. They're trading sideways. There are no updates at all. So we're moving on to the conclusion of this video. What do we have on the economic calendar? tomorrow. It's an important day, but once again, the Fed says we're not looking at inflation data. We're looking at employment data. Nevertheless, we have important economic indicators coming out tomorrow, all the way from personal income, consumer spending, core inflation, Chicago PMI, and the final reading for the University of Michigan Consumer Sentiment Index. Lastly, what do we have on the earnings calendar? We have Exxon, Chevron, and Caterpillar, three important stocks for the inflationary trade. Anyhow, folks, that's all I got for you for now, and I will talk to you again tomorrow. Thank you for watching. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.